I think markets have already priced in what people are expecting of the trade deal. And I think I've mentioned this a couple of times in the show. What's on the phase one trade deal is issues that China and the US have actually agreed on for quite some number of months. Back in May, when a deal was almost signed, they were talking about buying agricultural products from the Chinese side, China buying that from the US, and also talking about the currency implications of the renminbi and so on. Those are issues that the two sides have actually broadly been able to move forward on. Now, the second set of issues, the things around IP transfer, which perhaps will get a little bit more improvement here, but other things like industrial policy, the role of the state-owned enterprises in China's markets, the Americans' contention that American firms do not receive the same amount of the same fair treatment in market access in China's market. All these issues are not going to be resolved in the foreseeable future. That's our expectation, and I think that markets broadly should expect that. I'll be very surprised if they believe that there will be some significant improvement in the way that the Chinese government deals with these issues, because China is very ambitious. They want to be the leading technological nation, and they have to use these policies to help them get that way.
Phase two, as Martin was also reporting, still months away, but potentially if we don't have this tariff rollback, which the Treasury Secretary has said we won't, it could speed up that process. But still, what is it going to mean for the global economy, which has, of course, struggled over the last 2 years dealing with this trade war itself?
So last year was the worst year since the global financial crisis, and global growth grew by about 2.2, 2.3%. Unfortunately, we don't expect there to be a significant recovery this year. As you mentioned, kind of the trade tensions will still kind of rumble on, so it's not going to help the global economy much. And we're expecting something just a little bit better, maybe around 2.3, 2.4% global growth. And the recovery, that little slight recovery, is actually kind of driven by emerging markets not in recession quite so much. So if you look at the countries that fared really badly last year, Argentina are shrinking by over 3%. In 2020, it's going to shrink by a little bit less. Venezuela shrunk by over a third in its economy last year. This year, it's going to shrink by maybe about a fifth. So it's not really about improving growth. It's about shallower recessions, which I guess is not really a rosy picture for the global economy.
Right.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.